Okay, good morning, everyone. It is 10 a.m., so we will go ahead and call the November 12th, 2021 meeting of the Retirement System to order. Item number 2 on our agenda is to approve the minutes of the meeting of October 14th, 2021. I have a motion and a second. Please record your vote.
Trustee Janata, how do you vote?
Yes.
Item passes. Item number 3 on the agenda is the consent docket. We have 3 items we can take all together with one motion. Actually, 4 items, I'm sorry. I have a motion and a second. Please record your vote. Item is approved. Item number 4 is to ratify approvals. I have a motion and a second. Please record your vote. Item is approved. Item number 5 is to approve the claims docket.
Hold on.
I have a motion and a second. Please record your vote. Item is approved.
Trustee Janata, how do you vote?
Yay.
Item is approved. Okay, item number 6 is to approve the following applications for service retirement. We have 3 applications. I have a motion and a second. Please record your vote. Item passes. Item number 7 is to receive the report of death, authorize payment of the $5,000 death benefit, and authorize secretary to make necessary changes to conform on the following. I have a motion and a second. Please record your vote. Item is approved. Item number 8, receive report of death, authorize secretary to make necessary changes to conform on the following. I have a motion and a second. Please record your vote. Item is approved. Item number 9, receive report of death, approve continuation of pension to spouse. Motion and a second. Please record your vote. Item is approved. Item number 10 is to approve request of the following to terminate vested rights and commence retirement benefits. Have a motion and a second. Please record your vote. Item is approved.
Trustee Bryant, how do you vote?
Item is approved again. Item number 11 is items for individual consideration. Item 11A is an amendment number 4 with Davis, Graham, and Stubbs LLP for professional legal services for the term of January 1st, 2022 through December 31st, 2023, estimated cost of $35,000 per year. Have a motion and a second. Please record your vote. Item is approved. Item number 12 is receive investment consultant report. Item 12A is the quarterly investment report. Jason?
I'm going to go a little bit in reverse today, as I normally would. You have 3 pieces in front of you: the quarter report, the bigger book, which I certainly will not go through. All of it, I'll touch on a couple pages, and then the monthly report, and then a new item, which I can't remember if I went over it last month, but this market snapshot. But if you would turn to page 20 in the quarter report, I'll just review the performance of the fund for the 1 year trailing September and hit some highlights. Always like to look at this page where we're talking in terms of dollars as opposed to percentages. So as you see on this, on page 20, the first column is year to date, which would be calendar year to date. So the beginning of January 2021, the total plan stood at $874.9 million. Net additions, so this is contributions in less benefit payments out. It's a net cash flow of about $8.6 million, and the fund grew by $64 million over that 9-month period. Just if you look at, I think that 10-year period is pretty remarkable if you think about the growth in assets from 2011 through the end of 21, and what a strong 10-year period this has been. So in 2011, the total fund was right about $467 million. You've had $215 million in net cash flow, so contributions in less paying your participants benefits, and the fund has grown by almost $680 million over that time period. No doubt it's been a very strong period in the equity markets. We've had some ups and downs, but it's been a really strong period over the last 10 years, and really coming out of the financial crisis in 2008. As you look at the next page on 21, just in terms of objectives, return and risk objectives, we look at this over intermediate to I'd say it's intermediate to longer intermediate. It's still not really long-term for a pension plan that has an infinite time horizon, but looking out over the last 5 and 10-year period. And while you see a couple of no's there, this is very black and white as to how this is programmed. Those are 2 volatility measures. Your volatility or standard deviation over the 5-year period is essentially right on that of the benchmark. It's, the way this is set up, it's just black and white, and the beta or sensitivity is right on. So it's worded expected to be less, and we say no because it's not, but I don't want to, that's not alarming. But if you look at the 10-year numbers from a return standpoint relative to your current actuarial required rate of return, which you've been thoughtful about lowering, despite how good markets have been, as we look forward, yields are very low, continue to be low, and equity valuations are high. Although, while equity markets have continued to do well this year, our expectation for 2022, our intermediate capital market assumptions, we think our equity assumptions are going to go up a little bit because valuations are actually a little bit more attractive because earnings have been so strong the last year. Not much, we're still well above historical averages, but it's probably going to tick up a little bit. And the other component in longer-term capital market assumptions for equities and real estate is inflation. And certainly inflation has picked up. That will increase nominal return expectations a bit. Certainly, you got to back inflation out in terms of real return, but as we're looking at your 7%, that is a nominal return expectation, so that's going to bump things up a little bit. In terms of, if you go forward to page 24, we've talked about how strong results have been on an absolute basis. On the right side of the page there, you see different time periods. So year-to-date, 1, 3, 5, and 10 years, all ending 9/30. Just looking at that 1-year section, the total fund for the 1-year period ending September is up 20.4%. Actually now through September, the third quarter was a negative quarter. We saw some weakness in equity markets in August and September. Actually, the S&P sold off about 4% in September. October was a strong month, so when we roll that 1-year number forward 1 month, the 1-year return goes up to almost 24% through the end of October. Relative to your policy index, you're a little bit ahead. Relative to other public funds on a 1-year basis, you're right at the median. As we look at 3, 5, and 10 years, you're really in the top quartile of public funds over that time period. That's those numbers you see where it says rank 22, 24, 26. That's effectively you're in the top 25 percentile of public funds over that time period in terms of returns. So all in all, returns looking good. I'll just turn your attention briefly to the monthly report. Looking at the allocation versus targets at the end of October, we continue to be a little bit overweight to equities. We have done some rebalancing, and we primarily use your cash flow needs for rebalancing purposes, taking down from what's overweight to fund benefits. But we also did some rebalancing into real estate, if you recall, adding to the Morgan Stanley Prime Property Fund. We put in a subscription several months back. About $14 million of that was called, and that is reflected in these October numbers in that $108 million. So we're up a little bit more in real estate to about 11.5%, and we still have about a 3.5% underweight, and that's where that overweight in equities overall is coming from. I continue to mention this. You also made a commitment to the Starwood Distressed Property Fund last year. They had their final close this month. You made a $15 million commitment. They anticipate calling about 10% of that this quarter, so about $1.5 million. They're going to start calling that capital now. Finally, the other, while we have been taking down primarily from U.S. large cap and small cap to as the source of funds for these rebalancing and for your operating needs, because U.S. equities have done better, you continue to be overweight to U.S. equities within the equity bucket, and that some of that has been a positive as U.S. equities have done better than other parts of the world. That's been a positive relative to the policy index, but we'll continue to look at that. Finally, just this other piece yes.
I was going to ask you, when you look at it, we're 67% to 65, and it's continue to go up. When do we get to a point where we're going to start rebalancing from there?
Well, that's what we're rebalancing almost every month.
Okay.
Because of operating needs. We just raised, let's see. Last month, or in September, we took $11 million from Intech, $3.5 million from Times Square, and $7.5 million from Ernest Partners.
Okay.
So from your U.S. equities. A portion of that, 14 million, went for the real estate, to go into real estate.
Okay.
The Morgan Stanley Prime Property Fund, and then we've kept about 14 million in cash for benefit payments for September through December.
Okay.
And we'll look at that again, but we do that constantly.
Okay.
Jason, when you guys start, it becomes more alarming as
Yeah,
it's outside of that range, so.
Yeah, and I'd say it really never unless,
There's an allowable
unless there's major dislocations in the markets, you're not, because of what we're doing for operating cash needs, we never get there. So hopefully that answers your question.
Is that referred to as the allowable drift, right?
Yeah, we don't want to constantly be rebalancing back to target because there's cost associated with rebalancing. And so we primarily utilize your cash needs as the rebalancing mechanism. And as a mature pension system, you have ongoing cash needs. So it's, it happens. There's also a number of private market funds that there's outstanding commitments to. So that also requires liquidity. I think in the month of October, there were, if you go to page 5 of the monthly report, and you look at the bottom, we have cash flow activity for the month. There were 2.4 million in capital calls from funds that you've made commitments to where they're drawing down capital to make investments. And you had a little over 800,000 in what we call cash inflows. Those are distributions back from those funds. So the net cash flow needed from the rest of the portfolio is 1.5 million. So that's, and that's really coming from that cash we raised. And so that's moving long only U.S. equities and small cap equities into private equity, which is underway. While we're on this page, there is an item that I need to raise. One of your first private equity commitments, Singular Guff Distressed Opportunities Fund 3. You made that commitment in April of 2009. It's actually a fund that was raised in 2008. It was a fund of funds that was focused on distressed opportunities coming out of the financial crisis. So investing in other funds that were then investing in companies that were undergoing major distress, but due to the financial crisis. And the fund's actually done quite well. You made a $5 million commitment. They drew down $4.85 million. They're not drawing down anymore. You've received back $7.2 million from that fund, about a 1.6 multiple to your investment. Currently, the net asset value of that fund is marked at about $840,000. They've already had one extension of this fund. It's beyond the 10-year time horizon. Recently, they had an investor, one of the limited partners, come to Singular Guff and ask to sell their interest in a secondary transaction. You have to go to the general partner and ask. So Singular Guff went out to the market. They found a secondary buyer that was interested in that position, and then they came back, and then Singular Guff said, would you be interested in buying the whole fund? And so they've made an offer, a firm called Dorchester, to purchase the assets of the fund at effectively 80 cents on the dollar. We've had discussions with Singular Guff about this. The team that was in place that put this to work and that we underwrote in 2008 is gone. There are 2 teams removed from that. This is effectively about 50% of the value currently is in a public security. And then the rest is really what they're offering 80 cents on the dollar for. We are recommending that you elect to take this opportunity to liquidate at this offer. The alternative is agreeing to lock the funds up for another 3 years, and it's an old fund that it's in wind down mode. We think just clean it up and get it off the book. So Wiley has the paperwork. It's a pretty simple form that we just make that election, and that's our recommendation.
And
Right, the election needs to be done before December 1st, otherwise it just can't, we got it last week. It needs to be done before December 1st, or otherwise if you don't elect, you're locking your capital up for another 3 years, so.
Okay, well, I'll have Regina put an item on to ratify.
Okay.
If you don't mind, might I summarize, just so I can understand better? So, out of the 5 million, we committed 4.8 roughly has been drawn down. Essentially the offer is to get out at 80 cents on the dollar, right? So we'd get 80 cents on the dollar back
Of the 840,000.
of the 840,000. Okay.
So you've already, you committed 5 million, that's a promise to fund at the early days. They drew down 4.85, so you only funded 4.85 million. They've already distributed back to you 7.2 million. So if you've got your money plus
And then some,
another $3 million back.
Okay.
The current NAV of the holdings that they haven't been able to exit is about $840,000. So this offer is, we think because of the public security representing about 50% of this, we think you'll probably get somewhere closer to 90 cents on the current NAV. But it's still, for a distressed fund, a 1.65 multiple it's a good result. And at this point, it's an old fund. We just clean it up, get out, and move on.
Okay. Thank you.
Jason, so is your feeling on this that this has been a cash cow long enough for us on this, that we're probably better to take this money and then look at plowing it into another private equity project?
Yeah, it's
Is
such an insignificant amount at $800,000 for a $950 million pension fund that a 13-year-old fund to lock that money, to agree to lock it up for another 3 years to see what happens and if they can exit at a better rate. We think let's take this money now, clean it up. Obviously, it goes to another use, but yes, that's.
Is that something that we would see as somewhat like a normal life cycle of some of these investments?
Well, the normal life cycle is 10 years. That's
10
the expectation. But then they have the right to come back and ask for an extension, usually one extension. And normally we don't like to, we normally agree to extensions because the alternative is if you don't agree to the extension, they're going to give you private illiquid securities back, that there's nothing you can do with them. In this case, the alternative is they've got a buyer to take these illiquid securities. Maybe not for 100 cents on the dollar, but it's, again, it's such a small amount. We think it's the appropriate thing to do.
Okay, thank you.
Okay, that's all I have.
Okay, thank you. Item number 13 is comments from board staff and, I'm sorry, I'm getting ahead of myself. We need a motion and a second and a vote to approve Jason's reports. Okay. A motion and a second. Please record your vote. Item is approved. Now, we can move on to item 13. Oh, we have a comment from our legal counsel.
Mr. Chairman, I have, late last week, I received a request from Labaton Sicaro, one of our security firms, and they've identified a potential securities litigation against a company called Innovage Holdings, Inc., and we had some $208,000 in losses associated with this company. In March of 21 of this past year, Innovage issued 19 million shares of its stock at its IPO at $21 a share, and they allegedly made some misrepresentations, and the stock has fallen down to $6.52 a share. And so they're asking us to entertain whether we want to be potentially lead counsel or co-lead counsel. And so at the next meeting, I may bring back an item asking you to approve them to proceed with litigation
Okay,
and our participation.
sounds good, thank you. Now we'll try it one more time. Item 13, any comments from any members of the board?
Mr. Chairman, I would just like to mention the CAPS training that I attended in Denver, Colorado recently. Very good training. Boy, it's like taking a drink from a fire hose sometimes with all the speakers and the information that they had. But very, very good training, and I'm just very appreciative of the board allowing me to do that. That's all I have.
Okay. Anyone else for the good of the cause? I personally want to thank everybody that showed up today so we could have a quorum, we could have a meeting, transact our business. So, with that, we are adjourned at 10:27. Thank you. Oh, yeah.